let's say Bitcoin, right? You load up the company with a mix of equity and debt, and then you use that to buy Bitcoin. There's like a completely dead chain that some banker has created a DAT around, and they raised 300 million. Like, sure, it might pop for a few months, and there's probably a way to make some money there, but it's not a long-term play. But Bitcoin is a store of value, and I think it'll trade more like gold over time, where people are just buying it and holding it forever and passing it down generations. Yeah, I mean, there's one in particular that I'm very bullish on in the medium to long run, but maybe not in the short run, and that's Deepin. I think that Deepin in 10 years is going to be bigger than all of DeFi today. Let's say, real estate, for example, right? You put it on chain, it doesn't really mean anything because all the friction is in the legal and regulatory paperwork that you require for a transaction. So I don't really understand why it needs to even be on chain. We do early, geography-wise, we don't really care. We'll do anywhere in the world. And we like projects that have really good quality founders. So if people want to find us to pitch an idea, they can check us out on Twitter.
Hello everyone, how are you? Hope Web3 is treating you well. Hope crypto is treating you well. Hope you all are in green right now. Bitcoin just made an all-time high, right? Altcoins still waiting there. And I do understand you do have some questions. You do have questions that why my altcoins are not performing, why they are not making new all-time highs, right? So what's the best way to do? What's the best way to get these answers? To get these answers, today we have somebody from the world of investing, from the world of exchanges, from the world of crypto, who can actually help us answer these questions. So today we have a special guest. His name is Akshat Vaidya. He's the managing partner and co-founder of Maelstrom Fund. Maelstrom Fund, if you know Arthur Hayes, who is co-founder of BitMax. So Maelstrom Fund is basically his brainchild and brainchild of Akshat. And before Maelstrom, Akshat has led corporate developments and mergers and acquisitions at BitMax as well. He's somebody who has seen the ups and downs in the crypto world. He's somebody who has navigated and actually made returns on these ups and downs. So ladies and gentlemen, please welcome Akshat on the stage.
Hey there.
Hey Akshat, how are you? How is crypto treating you?
I'm good. I've been in crypto since 2013 as a retail investor, and 2019 full time. Yeah, I've seen worse for sure.
So at this stage, we can call you a crypto veteran, right?
I think by now, yes. Yeah, once you're 12 years into holding Bitcoin, yeah, you've seen enough downturns to be able to call yourself a veteran.
Though I still don't see any white hairs, you are still pretty much compact.
They're coming. I'm losing. I've aged like 5 years in the last 2 years. Let's put it that way.
I mean, it's crazy. I mean, 24/7. I know the world wants to be in crypto because of the 24/7 things. I don't know how healthy it is.
I agree. Yeah, it's definitely not healthy. It's kind of nice back in the old days when you'd have weekends off and public holidays off, bank holidays off. That age is probably dying.
Yeah, I see most of these guys marrying sooner or later. Then we will ask them again, maybe.
Right. That's a good point. Yeah, if we found time to date, then yes, that's true.
So Akshat, I mean, definitely you had a pretty successful run when you were at BitMax, and then you co-founded this Maelstrom Fund as well. So first of all, of course, I would request you to kind of give us a glimpse that what Maelstrom Fund is, how Arthur Hayes is tied to it, and what sort of roadmap or vision you guys currently have for this fund.
Yeah, so Maelstrom is the family office of Arthur Hayes, right? And I think you gave a good background on him. He's the founder of BitMEX, the exchange. He's the co-inventor of the perpetual swap product, which is now the most widely traded product in all of crypto, right? It's responsible for probably like not many people are aware. It was him and one of his co-founders who was at Oxford PhD. Arthur had just come out of banking. He was based in Hong Kong, and they just formulated this product together. And everybody else basically copy pasted it. Binance, FTX, every other exchange under the sun. And now it's being offered onshore, regulated wise in the US. It's that initial product that Arthur and his co-founders had tinkered with and created back in 2014, 15. And he became a billionaire off of that product and BitMEX. And then in 2022, when I was working at BitMEX, I was head of corp dev. I pitched him on this concept of like a family office, but one that's structured in a unique way, given his area of focus and his expertise and his age, his very young age. And we basically created Maelstrom, and now it's been 2 years plus that we've been making investments.
So just for our audience who may be new to this, what's the difference between, let's say, a family office or a VC fund like, let's say, Coinbase Ventures or maybe Animoca Brands? What's the difference here in terms of, let's say, investing principles?
Yeah, so I would categorize them as there's 4 main types of sources of VC funding in crypto, right? So you've got family offices, which are, there's a rich guy and he hires an investment team and says, invest my money into projects, right? That's type number 1. So that's what we are. Then you've got venture capital funds that have raised from outside investors. So that would be, like your Dragonfly or, insert large fund, Multicoin. Those guys have gone out to pension funds, high net worths, whoever, and just raised money and said, we're good at crypto. We'll invest your money into crypto projects. That's like this traditional VC model. And then you've got the strategic VCs. So you have, Binance has their own VC arm. There's like Robinhood Ventures, there's different VC arms that are investing balance sheet capital from a company. And usually they don't just make investments just for the sake of turning money into more money. They make investments also to create synergies with the portfolio companies they invest in and the mothership. So that's what I used to do when I was at BitMEX. I was head of BitMEX Ventures. And then the last category is very unique to crypto, where there are these market makers and hedge funds and things that are kind of liquid shops that act as VCs as well, because those lines are getting blurred in crypto. So I'd say there's 4 main types of VC investing in crypto, and for founders to be able to navigate those, I think it's probably quite a mess.
So Akshat, how is Maelstrom Fund doing? Let's say, if we were to, let's say, see the track record of Maelstrom Fund, if we were to inform people that, okay, if they're following you or Arthur Hayes, this is what you can expect, from Maelstrom Fund, basically. How is the fund doing?
Yeah, so the fund is performing quite well. It's all proprietary capital. It's all just Arthur's money. So we can be very flexible and we can move very quickly. We made some very high conviction bets very early on in the cycle. We went ham during the bear market, and 3 of the deals that we did in the very first year ended up becoming some of the top 10 most successful deals in this cycle, which were Athena, EtherFi, and Aether. Those are kind of like top tier 100x type positions. Then there's a number of others that are kind of more like the middling, like 30 to 50x type deals, and then the handful that are less than that. We've had very few to no write-offs, as in straight up to 0. Pretty good hit rate, and we've expanded our remit from just venture to now also liquid, and we're in the process of raising a fund that will be kicking off very soon for a private equity arm as well.
Oh, wow. So you're raising external capital as well now, right?
Yeah, so this is for the first time ever. We're about to commence this process in about a week. We're going to go to the market and look to raise capital, but not for the venture, not for the liquid. We're going to be raising for the private equity arm only.
Okay. Got it. So this is all, but this is all crypto only, right?
Yeah, just crypto only. So far, we've only done, on the VC side, we did 2 non-crypto deals, and that's it. Everything else has been just pure crypto. Liquid is pure crypto. And then even when we've touched other asset classes, like we've done public equities, they've always been crypto related, like they're the DATs, right? So yeah, crypto only strategy.
So when we talk about only crypto, what happens is that most of our audience, or even the new or retail investors, the new investors, they don't easily see the connection between, let's say, what DATs are doing to crypto or what maybe these ETFs are doing to the crypto world. Can you just help us understand, that if I am an investor, let's say in something as easy as Bitcoin or maybe as easy as Ethereum, and when I see
Yeah.
somebody, let's say, coming out on Wall Street and making this DAT around the coin that I hold, how should my
Yeah.
investment strategy actually change? Should I be bullish about it? Should I be bearish about it? Does it make my exit actually very complicated? Can you just throw some light on that?
Yeah. I think that so now there's over 200 DATs, right? And
Yeah, yeah.
vast majority of trading volume is concentrated in two of them.
Mm-hmm.
Um, you know, and I think that while yes, for individual investors, it's a lot easier to just invest in the underlying, right? And I'm just going to buy Bitcoin, Solana, whatever. For certain types of investors, their mandate only allows them to invest in public equities on a regulated exchange in TradFi, right? And so if you're one of
Mm-hmm.
those types of, even though it would be probably better for you to just buy Bitcoin for the most part, um,
Mm-hmm.
you can't because your mandate. So if you're looking at it from the perspective of a normal retail investor sitting in, you know, whatever, some
Mm-hmm.
like let's say you're in India, right? And you're thinking about, well, should I just invest in the DAT? Should I invest in the
Mm-hmm.
underlying? I think the real answer is both, but it just depends on the situation. So if the
Mm-hmm.
DAT is at a premium, as in if the ratio of the underlying that they hold and the value in the business is out of
Mm-hmm.
whack in either direction, that changes your decision. If
Mm-hmm.
the term is MNAV, right? If the MNAV is positive, then it's
Mm-hmm.
probably a good time to just buy the underlying. And if the MNAV is negative, or rather not negative, but rather below one, then it's probably a good time to invest in the DAT. But generally speaking, this is also just structurally changing the industry because more flows are coming in than ever could before because of this whole TradFi angle.
So when we say debt, and we see that essentially these guys are trying to lock as much as of the asset supply possible, right? So for example, earlier it
Yeah.
was strategies like burning the token. Earlier it was more about that how we are actually trying to somehow break down the supplies. Is it something similar to like burning tokens, or creating a debt is something different here?
Well,
Is it
when you
actually
create a DAT, right?
Mhm.
Yeah, so you're basically saying, okay, I'm going to take a random dead company in TradFi. Let's say it's a logistics company that basically makes no money, has like one or two shareholders that own vast majority of the stuff, and from a governance perspective, it's easy to pivot their business model. You'll
Mhm.
basically take that company, turn it into a shell company to hold, let's say Bitcoin, right? And
Mhm.
you load up the company with a mix of equity and debt, and then you use that to buy Bitcoin. And the idea, the theory is that, well, now this is the holdco and a way for traditional finance investors to get access to Bitcoin in ways they couldn't before. And so the funds start flowing in, right? And now with those funds, they take those funds and buy Bitcoin. So now Bitcoin is essentially being taken out of circulation, quote unquote. You could kind of think of it that way.
Mhm.
It's not exactly right. It just means there's new buyers, but roughly you could kind of do the same math. It's not like they're burned, but it's like, there's a new long-term holder that's bought these things, and supply of available Bitcoin to purchase has gone down, which thereby should increase the price.
So in the long term, if let's say we were to talk about Bitcoin or we were to talk about MicroStrategy, do you really see them
Yeah.
outperforming the underlying asset, or do you see them as a leverage play that these guys are utilizing right now?
Yeah, long term depends on how long term you're talking. If you're talking decades, I think no.
Mhm.
But in the short to medium term, yeah, there's still arbitrage is still going to exist where, there's a large pool of capital that just can't touch the underlying directly. And then on top of that, to your point, you've also got leverage in ways that were harder to do outside of TradFi because it's a lot easier for a public company like this to get that kind of leverage. So it's a levered TradFi friendly way of playing Bitcoin or whatever the
Mhm.
underlying is, and net in the medium term, probably very good. Eventually, long term, I think they'll converge because, there's eventually going to be less of a difference between the two TradFi and crypto ecosystems.
So I was imagining a scenario that I have one account on BitMEX and I have one account Axis where I can buy or trade stocks, let's say on maybe US based exchanges, and you're talking about, I think, this arbitrage where if I can track MNAV properly, then I can actually
Mhm.
make these bets interchangeably, right? I mean, one on BitMEX and one on, of course, NASDAQ or something else, right?
Yeah, exactly. You just buy Bitcoin on BitMEX, and then if the MNAV comes out of whack on Nasdaq, you just buy it there too through one of these DATs.
So guys, here is your first tip of the day. I guess you can call it a tip, but of course, do your own diligence first. Do your own research. This is not a financial advice, right? But yeah, again, I mean, this is
Right.
this is really interesting. I mean, because most of the people, because people I know, they don't trade in stocks. People in crypto that I know, they are mostly
Yeah.
native crypto people. I mean, their first investment was maybe in Bitcoin or some altcoin. So they essentially
Mhm.
see this as a threat. They are like, okay, so somebody is launching a debt. That means Wall Street is in, and that means there is more complexity in terms of an exit now. So we have been
Mhm.
talking about how this cycle is different from the earlier cycle. Will the flow be same as it happens from Bitcoin to other altcoins as we move ahead into the bull run? And I wanted to just get your thoughts on this. That do you also see the same kind of outperformance that we saw in altcoins in earlier cycles, or do you see this time that altcoins maybe will not behave the same way as they used to be because of these new introductions when it comes to ETFs, when it comes to debts, now perp dex as well, right? So do you see the same kind
Yeah.
of behavior from the altcoins, or do you see something different this time?
Yeah. I think, having seen the cycles since the very first altcoin cycle, right, in 2017, 18 to now, there's a familiar pattern, right? You've got certain, there'll be like a wave of innovation coming out of a bear market, and a lot of altcoins will pop. People are very excited about the prospect and promise of certain projects. And then there's a wave of disappointment when many of them don't achieve their goals, right? Which makes sense. There's nothing wrong with that. It's an early stage industry. That's exactly how it should be. And there's disillusionment with those tokens, but then there's also a flight to quality with the ones that do well, right? So you look at Athena was a brand new competitor in the fray of stablecoins, and they kind of popped up out of nowhere about 2 years ago, and now it's considered like a kind of like a mainstay in this industry. Whereas there's some alts that have not performed for the reasons that the projects aren't actually being used, and there's no reason for that
Mhm.
the altcoin to exist. So there's definitely like a bifurcation in terms of flight to quality and just the abandonment of many names. But then you've got this weird skewing factor to your point with the DATs. If there's like a DAT announced for a random unused
Mhm.
token, still might pump because of the sheer fact that there's just now a lot of buying pressure, but also some of it's psychological that because the market is aware that this data is coming online, they start buying the underlying. So it's like a self-fulfilling prophecy in a way. Those
Mhm.
ones won't last, right? If you like imagine, I won't pick any specific names to insult anybody, but let's say there's like a completely dead chain that some banker has created a DAT around and they raised 300 million. Like, sure, it might pop for a few months and there's probably a way to make some money there, but it's not a long-term play.
Yeah. So, I mean, definitely, if we compare earlier cycles to this cycle, we do see that there is, if we check out the on-chain data as well, while we can see that there is a flow of funds from, of course, Bitcoin to other altcoins, we are seeing it. But if we talk about Ethereum in particular, or we talk about, let's say, Solana in particular, we have been seeing that these assets for some reason are dragging this time, though they also have debts being announced. They also have some really spectacular debts on the other side. So in that sense, should even the earlier investors who are still here from 2017-16 cycles, should they be changing their strategy? Should they be thinking this differently? Or do you think, no, this is just a time frame kind of a thing, and sooner or later these altcoins will again start outperforming Bitcoin?
Yeah, I mean, your strategy always has to evolve, right? As the market conditions are constantly changing. Back in the old days, 10 years ago, we were in a zero interest rate policy environment, the ZERP environment, and we were also operating in the shadows. We couldn't really operate in
Mhm.
these businesses in the US. There was no Wall Street involvement yet. Fast forward to today, structurally, just things look different. There's new money that can touch crypto. Wall Street is now creating all the piping, and the flow hasn't begun yet, right? They've just been like laying the plumbing. The water will flow, it will come, but that's not there yet. And it's also, as I mentioned, right, there's more of like, there are projects that actually make revenue, and the value accrual mechanism with the token actually works. Hyperliquid has, shown us one of the best examples of that. And over time, more and more crypto projects will look like that, and there'll be fewer dead random chains out there that have no reason to exist, to continue to exist. So I think you just have to be a little bit smarter now than it was, maybe 10 years ago, where you could just kind of just rely on some pamponomics and just get in and out of tokens. I think now you actually have to run some actual discounted cash flow analysis and try to see, okay, is the thing making revenue? Okay, is it making profit? Okay, is that profit being translated into the token price based on the the burn mechanism? Yes. Okay, then that's something I should touch.
So do you still see this kind of flow that we have observed earlier as well, from Bitcoin to mid caps, mid caps to micro caps? Do you still see that playing this time around, or you are like that things are going to be different now? Do
Yeah,
you
I think
still
it's a
see
little
that play?
different because I think, ultimately it's just funny that we call all these things crypto when they really are very different, right? Bitcoin has nothing to do with Hyperliquid, like literally nothing.
Agreed.
They
Yeah,
have
yeah, yeah.
no qualities that are similar, but they just happen to use the same underlying blockchain technology. But Bitcoin is a store of value, and I think it'll trade more like gold over time, where people are just buying it and holding it forever and passing it down generations, right? Whereas alts, like Hyperliquid, yeah, it depends. Certain environments, if they're performing well, then it makes sense to hold it at certain prices. That could change. If they don't perform well, then it'll go the other way. So I think we're moving away from everyone piles into Bitcoin, and then everyone piles into altcoins, and then everyone piles into Bitcoin. I think that's going to go away over time. It's going to just become Bitcoin is gradually increasing because everyone trusts it and relies on it. And then you assess altcoins on their own individual basis, right? And their own merits. And so they're not just going to like pump just for the sake of pumping. It'll go up if the underlying project does well. And if they don't do well, it'll go down.
So, I mean, in a way, the space is maturing up. There are more serious investors in the space, and I think the metrics are also over time now going away from just number of users or number of wallets on a chain to actual revenue that who is making. I mean, it makes sense, yeah. But
Yeah.
it also raises a lot of questions, because many of the people are using crypto to just buy and hold something and expect returns, right? In a way, just because of the hype or the fame of the project. I think that's now slowly and slowly going away in a way.
Yeah, slowly, but it's still there. I mean, you still have the meme coin phenomenon, right? Of Q1 and Q4 last year. So it
So,
still happens.
I mean, just just to ask a question, you there. I mean, are you guys taking meme coins seriously? Do you guys invest in meme coins?
We as a fund don't invest in meme coins. Arthur does as an individual sometimes, just for fun.
Okay.
I have invested in a meme coin fund. I invested in them in like January or so, and it's done pretty well. But it's you can't invest that much in a fund like that. It's highly risky, but also two, it's not that the carrying capacity of these kinds of investments, there's just not that much liquidity out there. So it's not a way to get very wealthy, but it's a way to have some fun and maybe get a little bit wealthy.
So recently, I was actually, having this discussion with some family business in Middle East, and most of them are right now in FOMO. I must say that. I mean, they are just right now in FOMO. They just want a token. They just want to invest money, and somehow they have that kind of expectation of crypto, that it is something that gives you 10x, it is something that gives you 5x, it is something where you can talk in terms of multiples. And I personally feel that this might be the wrong time to now finally discuss about it. I mean, maybe there was a time about it. Maybe let's say 1780 cycle was a well example about it. But in 2025-26, discussing about 10x, 15x, 20x, maybe that is not that good indication for us as well who are in crypto. So how are things at your side? I mean, you constantly discuss with these large funds, you're constantly sitting with these VCs. Do you also see them kind of changing their perspective and focusing more on coins with good fundamentals, good revenues, good balance sheets, or do you still see that appetite in them that let's say we are going to support some coin that is trending right now? So, for example, RW is there, DETs are there. These are also trends right now. So, do you still see
Mhm.
them doing trend-based investing, or do you see them completely shifting towards now more fundamental-oriented investing?
Yeah, it's a little bit of both, right? So the old VC model in crypto, it's still
Hmm.
happening, right? Where VCs will try to invest in a project before it gets launched on an exchange. The exchange takes their fee, and then it gets launched to the public at, like a 10x multiple from when the initial investors invested. And
Hmm.
then the hope is that during the unlock period, people don't dump it, and maybe 10x goes down to 5x, and then VCs exit, right? That's like the traditional model. Still very much happening, but there's an evolution that's also happening at the same time, where again, you see with like these fair launches of the hyperliquid variety where they just go straight to retail and they say, well, look, we don't care about VCs. Um, and we don't care about exchanges. Our loyalty is just to our project, and we're going to do what's best for the project. So they just like
Hmm.
launched the tokens, and they said, here's our product. If the product is used, here's how value accrues to the token. You make your decision, market, and they bid it up, right? And VCs got sidelined. I think that's how it should be done, and that's how it will increasingly happen. There's no reason that just because, I work at a firm that has a brand name, only I'm allowed to look at it early. Doesn't make sense. Why shouldn't
Hmm.
everyone else have that same chance? And then just by the sheer fact that I looked at it early, I automatically get the cheapest valuation that nobody else gets to get, and then it just gets dumped onto retail. I think that
Hmm.
model is dying, and increasingly over time it's still happening, but it's dying. It's on the way out. Eventually, we'll be in a world where VCs and, some kid in the basement in Russia have to compete with the same amount of information and have to make the same decisions. And honestly, a lot of VC funds are just going to close shop. They're not going to survive because they don't know how to operate in this paradigm.
Yeah, I mean, you see these trends which have already come this year. I mean, earlier it was all about ETFs, then it became all about stable coins. Now it is all about perpetual dexes. And
Mm.
I'm sure Wall Street is taking more and more interest into this crypto and crypto ventures and everything, right? And things
Yeah,
are becoming more and more complicated for everyday retail investors as he or she is looking at this. And
yeah,
here I actually wanted to know from you that are there any particular trends that maybe a normal and average retail investor is missing that you're observing at your end, and that you see that maybe this is right now not in the hype, this is right now, let's say, hidden, but sooner or later this trend
yeah.
will also come out? So do you also see some trends like that?
Yeah, I mean, there's one in particular that I'm very bullish on in the
Mhm.
medium to long run, but maybe not in the short run. And that's Deepin. I think that
Mhm.
DePIN in 10 years is going to be bigger than all of DeFi today. And that's just a matter of uh, TAM, right? The fact that DePIN business models touch the entire industry, the entire economy, and have applications and use cases that are far beyond just strictly financial engineering and financial innovation. And their day in the sun hasn't come yet for a couple of reasons. There were regulatory barriers, some of which have started to become eroded now. The SEC just basically said DePIN tokens are not securities, which is pretty amazing. That just happened like 2 weeks ago or last week. And also, the value accrual mechanisms for the tokens themselves were broken for a lot of DePIN. Um, and I think lastly, they were kind of shut out from from like the mainstream economy in the past because it was too early, right? But
Mhm.
good quality DePIN projects in the future, they're going to have clients that have nothing to do with crypto. They don't know that they're even involved with anything that uses the blockchain. They don't care as long as they're able to get the services that they need more cheaply. And there's the regulatory clarity is going to be further steps that not only make it clear that they're not securities, but there'll be actual policies to support and promote these kinds of business models. And there will be a time where it'll be very hard to tell what's a DePIN business and what's just a business, right? I think that's maybe 20, 30 years away, but we're getting there. And that's a category that I think right now is not in vogue. No one cares about it. No one's talking about it. But we are aggressively market mapping, we're researching, we're reaching out to teams, and we're trying to get as smart as we can.
Wow. So, and I quickly wanted to know your thoughts about the ongoing hype around stablecoins, the ongoing hype around RWA as well. I
Mm.
personally have advised a few RW projects, and I have seen that tokenization is being used for a lot of things that it shouldn't be used. First of all, I mean, but again,
I
I
believe
mean, when
that.
it comes to really illiquid, yeah, I mean, I have seen some really weird uh, attempts to tokenize things that shouldn't that shouldn't be done. But again, it's the VCs,
Mhm.
I think, again driving that model where they think that listing something on an exchange somehow makes it really valuable, right? I mean, it's a liquidity play
Yeah.
there as well. That if I were into equity and if I were to, let's say, invest in a startup and then be there with them for 5 years, 6 years, and I finally get my exit, as compared to a
Yeah.
token which gets a TG and lists on, let's say, Bybit or some other exchange, and I can get my exit as soon as possible, right? So
Mhm.
that kind of thinking has somehow creeped into tokenization as well, there where they think that okay, you can list a token, and the same play will be here as well. So I wanted
Mhm.
to just get your thoughts around RWA, that how particularly you see it in your playbook right now at Maelstrom. Have you invested in RWA projects? And do you really see a trend or something usable happening here, or some projects really coming out and actually, following regulations and doing it?
Yeah, I mean, eventually the lines will become blurred between DeFi and CeFi and the TradFi. All these three things will someday look quite similar, if not have the same underlying
Mhm.
stack. But for now, like you said, right, there's just a lot of stuff that doesn't need to be on chain. It's already easy to access. There's actually drawbacks even for things like that to be on chain. And I'm not extremely bullish on the category in the short
Mhm.
run because it's going to be ultimately going to be Robinhood, Charles Schwab, et cetera, that just start
Mhm.
becoming issuers of these. There's not a lot of reason for them to use outside third parties um, to do this, and it's also just I think there aren't that many efficiency gains that come about from bringing real world assets on chain. Because ultimately, there's still a lot of like legal processes. Let's say, real estate, for example, right? You put it on chain, doesn't really mean
Mhm.
anything because all the friction is in the legal and regulatory paperwork that you require for a transaction. So I don't really understand why it needs to even be on chain. If anything, you just added one more layer of complication to the whole thing.
Mhm.
Um, but then there's some things that probably should, right? Like maybe commodities, right? Maybe that there's some obvious reasons why those should probably trade on chain. Um, so it just depends on case by case basis. But we as a fund have not invested in any RWA plays. I have as an individual. I've invested in Ostium, um,
Mhm.
but not as a fund.
Okay. Okay. And so, I mean, particularly I think the hypothesis is that you have something illiquid, you bring it on chain, you get this instant boost of liquidity on these
Mm,
exchanges which are there already, including BitMEX. If in
right.
case they list you, of course. I mean, that's a debatable point. But the
Yeah.
arguably the point is that there is some sort of liquidity boost that you get when you bring something on chain. While I do think
Right.
that if you don't have I mean, utility token, it's not going to be listed any day on any exchange right now, the crypto exchanges
Right.
particularly. And if it is a security token, I don't see liquidity anywhere right now. If you talk about securitize in US, you talk about other funds I mean, other exchanges as well, which are doing this in a limited capacity. They also don't
Yeah.
have that level of liquidity. If you see the volume, yeah, and you compare to BitMEX, it is laughable right now, right? I mean, so
Yeah.
I really don't see how it is helping you to bring liquidity, right? If it is a utility token, you cannot give ownership, number one. If it is a security
Yeah.
token, I don't see liquidity. Where is liquidity there, right? You are still kind of
Yeah.
just creating another redundant asset, which is doing nothing. And
Yes.
so Wyoming in US, I think, did try to do this. And as far as I know, they are failing miserably there because they did allow everybody to create a digital twin of their assets. Everybody did
Mm.
create it, but now again everybody is stuck at that stage. So
Right.
I'm sync with you, but I mean, so do you really hear or see anything that is coming substantial in this field, or you're totally right now a no about this? Do you
Yeah,
see
so
any
far I haven't really
milestone?
seen.
Yeah.
Yeah, through Maelstrom, I mean, it's unlikely. I think I mentioned, commodities is like an interesting area where it actually does kind of make sense, and it's a meaningful improvement from the way
Mhm.
these things are traded now. But you still have the same issues, right? Like, does it make sense to bring something on chain just for the sake of it where there's no liquidity yet? Probably not,
Mhm.
right? But you know, I think that will change over time. Eventually, someone will crack the code with a certain type of asset where it makes sense, but we haven't gotten there yet.
Okay. So another trend that has been there for last 6 to 8 months is stable coins, of course. And
Mm,
we have seen a flurry of stable coins being launched now by crypto projects, crypto exchanges, even the Wall Street players, the banks, the payment gateways, these are also coming up with their own stable coins. And I wanted to
yeah.
know from you that what sort of future or what sort of, let's say, investment strategy you have for these companies or for these projects who are launching these stable coins. Do you really see a need for these many stable coins in the market? I mean, and when we compare them to, let's say, existing fiat rails, do you really see a need for these many stable coins? And what's your opinion on that?
Yeah, with stablecoins, I mean, there's kind of like now there's three main top stablecoins, right? You got like Tether, Circle, and Athena. And
Mhm.
Tether, non-US, Binance is basically extremely dependent on them, right?
Mhm.
Um, you got the USDC Circle, which is the US version of Tether, a little more
Mhm.
trustworthy, onshore, easier to deal with, publicly traded now. And then you've got Athena, which is a completely different model. It's more of a synthetic dollar than it's not really a stablecoin, and it's the highest yielding product. So I think, if there's like three main types, there's no particular reason for there to be too many of them, other than it's a super profitable business model and it's going to attract copycats, right? Because why not? I think if you're a financial institution in America and you
Mhm.
see that Tether is making 4% or 3 point whatever percent net interest
Mhm.
margin off of a very, very simple product that takes fewer than 100 people to manage, I
Mhm.
think you would be very incentivized uh, to say, well, I'm just gonna do the same thing because right now I'm getting maybe tens of bips at best
Mhm.
off of a
Mhm.
similar AUM, and I've got 20,000 employees looking after this business.
Mhm.
So it makes sense that they're all going to want to come in and say, well, why don't I just want a stablecoin? They're going to find out why they shouldn't because network
Mhm.
effects are very valuable. But that being
Mhm.
said, there are some players out there who might have better network effects than Tether even. I think
Mhm.
like, Amazon, Twitter, there's some examples of companies that they had stable coins. Yeah, they could really challenge some of the larger incumbents. I think people in crypto shouldn't get too comfortable. We've seen many, many times in history where the original uh, winners are not the final winners in a new
Mhm.
industry. Saw that in Web 1.0, right?
Mhm.
And also Web 2.0. Um, Alta Vista, was one of the first one of the first search engines. I used it as a kid, and then randomly out of the
Mhm.
blue, Google just like basically copied their entire everything, right? It even had the same like kind of appearance and interface. They just tweaked one thing in the search model, and that took off. So I think that while the big three are huge and they have staying power and they have network effects, they
Mhm.
shouldn't get too comfortable because that could change.
Yeah, I mean, AI is reducing the barriers to copying.
Right.
You
Yes,
can copy
exactly.
anything now.
Yeah.
The
So the
first
tech is no
mistake we
longer the
all.
moat.
Yeah, yeah. I mean, so, but I wanted to share, run by you, let's say, I don't know whether it's brilliant or whether it's, let's say, something actually useful that somebody can do. So let's say you see these central banks now giving guidelines and rule book to launch your own
Mm.
stable coins, right? And I do see a lot of existing payment companies, lot of companies that are already in some sort of, let's say, global or cross country e-commerce kind of a business. They do see a value here whereby they want to launch a stable coin now and utilize it as a payment gateway or as a payment remittance gateway on their own applications. So do you see these kind of private stable coins also kind of, making a kind of a value, making a kind of a spot where, let's say, there is a private company and it gets a license and issues a stable coin, and then over time it utilizes it for their own business?
Yeah, I mean, you're saying if like Amazon, for example, decided that within their own
Yeah.
ecosystem they're going to use their own
Yeah.
stablecoin because they're like, well, why shouldn't we just collect the 3 point whatever percent net interest margin? I think it makes sense, especially if there's like a lot of suppliers and customers and it's a global business and it's very spread out. There's a lot of
Mhm.
efficiency gains that come with that, but it probably doesn't make sense for a simpler business that doesn't have as many transactions. So
Mhm.
theoretically, yeah, I would do the same if I were the internal team responsible for payment flows within a very dense ecosystem. I would definitely be looking at and evaluating uh, launching our own stablecoin to do the exact same thing, but more
Mhm.
efficiently with fewer frictions and more profitably. Yeah, I think it would
Mhm.
make a lot of sense.
I mean, surprisingly, as compared to when you compare now US to Middle East or even Hong Kong for that reason, I mean, you see a lot of innovative ideas being discussed on the table. Whatever I'm discussing with you right now, sharing with you, these are some random ideas that I have seen people discussing, right? And I always
Mm.
think that, do they really have that much value? Is this short-sighted? Is this actually being evaluated on a time frame of, let's say, 5 or 10 years? But here, I mean, I have a question for you because I know a lot of crypto projects are listening this podcast. I know a lot of investors in crypto are listening to this podcast. So if in case I am a crypto project or I'm somebody who has, let's say, done recent good work, has some good track record in terms of crypto adoption, does can I reach out to Maelstrom Fund, or is so how does Maelstrom Fund help me, or is it something which is only for, let's say, reserved or accredited investors? What How does it work here?
Yeah, so our VC fund and liquid fund don't take outside investors.
Mhm.
Um, but we see ourselves more of like a service provider to founders in a way. So,
Mhm.
if you're a founder team and you're creating a great project, we are basically saying, hey, we'll help you in exchange for
Mhm.
some of your economics. And the way we help is through the money, right? Here's money, and I go build what you need to, go hire what you need to, whoever you need to. There's the money part, and then there's the operational support that we offer. Maelstrom
Mhm.
is founded by Arthur and myself. Arthur is an operator. He's founded a company before.
Mhm.
He's been out there with a pitch deck, running around, getting laughed out of the room, back in 2013 when he said, I'm going to raise money for a crypto exchange focused on derivatives. It just sounded crazy, right? And he built the thing basically from the ground up with his two co-founders, and they bootstrapped everything. And then later on, there were some things that didn't go as well, right? And so he's got a lot of
Mhm.
do's and don'ts and advice that he's very candid and happy to share with founders. And we also have a deep bench of network in terms of people to reach out to help
Mhm.
companies and founders find additional team members, co-founders, etc. So it's the money and it's the operational support, and in exchange for that, we take some of the equity.
So, are there any particular areas of interest that you have? And is there any particular stage of the startup that you're looking at? So, I mean, do you look at
Yeah.
startups which already have some traction? I mean, what sort of founders or startups in what stage should reach you?
So we are very price sensitive. We don't do deals that are over like, let's say 50-ish million FTV.
Okay.
It's very, very rare that we've ever done anything more than that. We try to go very early, but a little bit of traction is important to us just to see that there's product market fit. Not a lot.
Mhm.
The product doesn't need to have actually been launched, but we just need to see that the product market fit process is either commenced and is doing okay, or there's line of sight into it commencing and doing okay. We do early geography-wise. We don't really care. We'll do anywhere in the world. And we like projects that have really good quality founders. So if people want to find us to pitch an idea, they can check us out on Twitter. There's my handle is Akshat_HK, and we also have the Maelstrom one as well.
So we will put Akshat's Twitter handle in the description. You guys can click it, and you guys can go to the Maelstrom Fund websites as well. You can follow Arthur Hayes. So I mean, you and Arthur are actually one of the most active people on Twitter. I have seen that. So anyways, you are just giving information for free all the time. Now, here's my last question to you. And this question again is totally for people who are into crypto and right now are seeing this, all the hype on Wall Street, seeing this FOMOing on Wall Street and are right now, wondering that are we actually the smartest people in the room or not anymore? That's the debate. So how should an average investor plan his investments now in crypto? I mean, do you think that it's easy now, just park your money in Bitcoin, rest aside, or do you still see a lot of flow happening to altcoins, and people should actually hold their altcoins as well? Or do you just say that, okay, go to Bitcoin, leave everything aside?
Yeah, I mean, I guess none of this is really financial advice, but I'll just say what I have done and what I think has worked, which is just treat these all separately. I've been dollar cost averaging into Bitcoin with weekly buys on Coinbase. You can just set it automated to just buy every, let's say $200 a week or something like that, and you'll just do it automatically. I've been doing that since 2014 January. I'm never going to turn that off. That's just stable, gradual, store value play. However, with the altcoins, right, it requires a more hands-on approach, and you have to take each project its own merit. I would say the time is also very important, the timing in the market. Do it in a bear market, right? That's when you should deploy most of your capital. In a bull market, maybe sell some, right? Unless there's really high conviction long-term bets. I would, and what I have done successfully is sell kind of at the right time, and then just keep pivoting back and forth between the buying a stance and the selling stance, depending on market conditions and how the project is doing.
Yeah, I mean, makes sense. Makes a lot of sense. So Akshat, thanks a lot for your time today. And I hope this podcast will help founders who are right now working on awesome crypto projects to, first of all, reach out to you. I personally believe that your track record right now is one among the best when it comes to crypto investments. Plus, I have personally seen Arthur being passionate, you being passionate about this industry. So, I mean, it's not somebody from Wall Street coming and creating a fund and now just, talking about returns with you. It's more about that you can provide them the assistance, the guidance that is quite rare right now in crypto. As I said, I mean, crypto is in a transitional phase now, we can say. It's transitioning from a less mature to a more mature kind of a bandwidth, and that will create opportunities also, in my opinion. And you guys are the right to help people navigate here. So thanks a lot for doing that service for the community, and all the best for the funds that you're raising. I'm sure you are already in Middle East, you're already in US, you're already in Southeast Asian countries. So I do hope that we will see some really cool announcements from your end soon.
For sure. You definitely will. Thank you.